Hello traders, today is April the 14th. My name is Neville Hornsey, market and trading. And today I'm looking at the euro versus the US dollar. I'm going to start with the economic calendar. We can see at 12:45 today, we've got the ECB deposit rate for April, expected to come in at negative 0.5% as it has done in previous months. We also have the refinancing rate for April, but the sort of main focus for algos, if you like, and retail and news traders will be the deposit rate. If we get obviously a change in that, then that will be a big surprise and the euro will definitely move. However, whatever moves do happen on that rate sort of announcement may be undone, sort of reversed or continued, depending on what ECB President Lagarde says in the post-policy announcement press conference at 1:30 British Summer Time. So 45 minutes after the initial move, we could get a reversal or a continuation higher, depending on what they say about their asset purchase program. Obviously, they changed from their asset APP and PEPP, which was the pandemic emergency purchase program. They sort of finished that, moved some of the bond issuance and buying into the APP. And now we're waiting to see if they're going to reduce their balance sheet as the Fed and other sort of central banks are sort of indicating they're going to do. That in itself is like adding a little bit of a rate hike itself. Going to the 10-year bunds and benchmark US yields, we can see here that for quite a couple of years, well, for a few years, the bund yields were below zero, as obviously they saw the ECB reduce their rates below zero. Then January 2022, a big sort of move up above zero, came back down to test that zero line. And then in March, the bund's been going a lot higher, the yields were going higher. So we're at 0.775% now, obviously indicating that inflation that is sort of across the globe is expected to keep rising. The ECB will have to do something about that in the future. So the markets are basically pricing in further rate hikes down the line. Here we can see that the benchmark 10-year almost touched 2.8%. 3% in years gone by had been like a magic line, which, the yield should never cross for fear of creating some sort of recession. Obviously, we saw it actually cross over 2018 here a couple of times before it actually came down to near zero. So that's the yields. In Forex, we're looking at the euro. We can see there's a big move into the euro now. It's completely green. It's even trading higher against the New Zealand dollar for most of the day. The New Zealand dollar is also vying for the sort of relative strength. We've got yen also vying for relative strength, whereas the Aussie, the Swiss franc and the US dollar are kind of sort of showing risk coming out of those currencies. So looking at the actual Forex heat map, there's no clear risk on, risk off. We just know that there's flows going into the euro ahead of this ECB. So looking at the actual levels now, we can see that here I've marked up the last few or several ECB meetings. If it's a green eye, the day ended green. If it's a red one, like it was last time, it ended red on the day. So just looking here, so in December, nothing really happened. Obviously, we're waiting for the Fed to do their rate hike as well in 2022. But essentially at the end of the year, euro versus US dollar was just trading sideways across the 1.13. We had a push up at the end of December into January, then sort of swept the lows of that sort of range, if you like. And then as the ECB sort of meeting for February sort of came into sort of play, and we saw a bit of a rise in the euro. Then we saw the big push up on the actual news announcements. Then we had a slight spike higher, took out the double top into this sort of old ECB range here. Then big sell-off. So we've had a big sell-off as the US Fed basically went into rate hike cycle. On the last ECB meeting, they spiked it higher into this balance area, into this sort of range low that I've marked up before. So where we had the ECB give the euro a bullish day in February, when traders essentially stopped those guys out on the 24th of February. That was obviously also the Ukrainian Russian tensions sort of escalating as Russia invaded Ukraine. We had a big spike down, took out that range low, sort of swing low, and then we accelerated to the downside. ECB essentially just brought it into that range, into that balance area, and then sold off down to this swing low. So now we're waiting to see, are we going to sort of stay within the 1.11 down to the 1.08, or are we actually going to start to see things go lower? Now, 63% of traders are trying to go long the euro versus US dollar, which is, to me, the trade is getting more crowded. So, expectations are for retail to try and keep pushing higher. I think they'll get prices advertised higher. So they'll jump in. They'll try and get above this liquidity here from the double top from sort of 6th of April and 7th of April. Some might even look at this 11th of April as adding to that liquidity level. But if we get above there, traders will be looking to sort of see this candle from yesterday continue higher, a big bullish sort of move, with the idea of getting back up to the 1.12. However, I've got the 4th of April low as resistance. So what I want to see is some bullish moves, get some traders trapped into a long position, find resistance at this candle's low from the 4th of April, and then a big move down to take the swing low at 1.0805. That's my base case scenario. Obviously, the RSI stochastic not sort of showing that they're particularly oversold at the moment, or overbought. So it could just get a range move. I just think they're going to look for liquidity, and liquidity is definitely above these daily highs and this big swing low here from yesterday and the 7th of March. So that's what I'm looking for, which would then basically, where we had this swing low, significant swing low to the ECB high, we would have swept the highs of that on the 30th of March. And I'm just looking to see if we sort of sweep below and take the liquidity below the 1.0805. If we look on a monthly chart, the euro versus US dollar is in a clear downtrend from 1st of May 2021. We've got this indecisive candle here, which ended up being a base for a big rally up. So there's underneath the 1.06355, there's going to be some stops. So, a good couple hundred pips to the downside should we get a break lower. However, RSI is not quite oversold, but the stochastic is starting to sort of show some sort of divergence. Obviously, the lower stochastic levels can stay lower for longer. So if we were to have a period between July 2018 to October, so that's a year. So a year of pretty much oversold stochastic. So from November 21, maybe the next 6 months, we could have another, few months coming lower to take out this swing low here and test this balance area from 2016. So that's kind of what I'm looking at. Obviously, if we get below this swing low here, and if I was to extend that to the right, you can see that's kind of where we've been testing this month and last month. So if we go back to a daily chart, you can see this rising blue line. Yesterday bounced off it. So if we take out yesterday's low, then that obviously opens up the possibility of a breakdown, retest, and continuation lower. So again, we might not just get the sweep low before coming back into the range. We might actually get lower lows down towards parity. So it all stems from what happens post the ECB press conference. Then we have to sort of take into consideration that tomorrow is going to be a bank holiday. Monday's going to be low liquidity as well. So come Tuesday, that's when I'll be looking to sort of revisit this chart, see what happened actually today after the ECB press conference. Did we take the liquidity? Did we find resistance at the low of April the 4th? Did we come back into the range from yesterday? Did we take out yesterday's low? All those sort of questions need to be answered. And if I think actually, we're looking like we could, based on the fundamental sentiment and, what happens in the price action, take out this swing high, then this whole idea could be reversed. So I need to be aware of these levels as you do, but I'm not really going to sort of act on them until I know what happens beginning of trading on Tuesday. Okay, I hope that makes sense, and I'll speak to you again next week.